you mentioned, S&P did put Nigeria's outlook as stable, and they continue to rate Nigeria as B+. However, it's important to mention that Fitch last month did put a negative outlook on its BB- rating, which of course is much higher than the B+ that S&P is rating Nigeria. Join us in the studio to take a look at the implication of that rating, more so with Nigeria going to the international market to raise $500 million in bonds next month. Is Samir Gadio, as you mentioned. Thanks a lot for joining us. First of all, let's just get a sense of your view of the creditworthiness of Nigeria, because that is indeed what all these ratings are all about. Do you think anything has changed dramatically over the last 1 year?
Thanks, Wole. I think it's a mixed picture. Well, on one hand, the external fundamentals are very good. With oil prices where they are now, obviously the current account is going to be in the positive territory, so we expect a surplus of about 10% of GDP or so. External debt to GDP is still at about 2% of GDP, which is the lowest ratio in Sub-Saharan Africa. But the problem is that foreign reserves have declined to about 33 billion now from 42 billion in January, and also that Nigeria is going to have an election, which seems to be a concern in some circles. Indeed,
that has been a concern. But let's get a sense to compare Nigeria's rating with its African peers. How does it stand, that B+ rating?
Okay, well, Angola is rated B+ by S&P and other agencies. So I think actually it's quite interesting because those countries produce almost the same amount of oil. And in Angola, foreign reserves have increased to about, I think, $16 billion now from 12 billion in January. Yeah. In Nigeria, reserves have declined. Gabon, which is another oil-producing country, is rated BB-. So in this group, it's the highest rated country. Senegal, which is another country which having a Eurobond, is rated B+. Ghana was recently downgraded to B by S&P.
Okay, now let's get a sense of the uptake that you anticipate for this Eurobond. Like I mentioned, it is $500 million that the government is looking to raise next month. They've already announced that they would announce book runners for that process next month. What's the uptake that you're anticipating for this, considering the liquidity levels we're seeing globally now?
Well, I think that's the key. I mean, the main issue is not really the rating at that stage. It's more the global liquidity. And because the central banks in developed countries have been printing money substantially over the last years, there is a lot of liquidity. Investors want to put their money at work. And so as long as those rates are higher and attractive and more attractive than in developed countries, I think we will see this we'll see demand for this Eurobond at very high levels. So I have no doubt that the Nigerian Eurobond will be oversubscribed.
Well, what about timing? December is at the end of the year. I think markets tend to not shut down, but at least wind down at that point. Do you think that's a factor that might be at play in this, for this issue?
Yeah, I think that's a downside risk. If you want to issue, you have to do it by mid-December at the latest. If you wait until Christmas, then it's a problem because obviously investors will close their books for the year. And it's exactly what happened to Senegal in 2009 when they issued, well, in fact, they were one of the last countries to issue their Eurobond, and they paid a higher price because of that.
And what about pricing? What proxies do we have out there that we can compare this bond to? It is, I believe, a 10-year bond that the government is looking to raise. Are there any proxies out there that can give us a sense of what price it might come out at?
We don't really have a 10-year bond in Sub-Saharan Africa, but we can use Gabon's and Ghana's Eurobonds, which have 7 years to maturity. Gabon's bond is trading at 4.7%, its lowest level ever. And the Ghana's Eurobond is trading at 5.9%. So that shows you where Nigeria's Eurobond would be priced. We think that it's probably going to be between 5.75 and 6%.
And then if we can move on to the concerns of S&P and Fitch. Obviously, the politics is in the spotlight right now. Election concerns with elections coming up next year. What are your thoughts on how this is likely to play out? Do you think these concerns are overblown or are they really justified?
Well, I think there is always some sort of uncertainty ahead of an election, and not only in Nigeria, actually across most frontier markets. But no one really believes that there's going to be a major spike in violence in Nigeria. I mean, this is very unlikely. But the key issue, though, is that fiscal spending is likely to rise as we head to this election, and so that might be a concern internationally.